Welcome, welcome, everybody. Welcome to our LinkedIn Live series where we bring on FemTech and business experts to talk about innovation in women's health and wellness. I am so excited to have a longtime partner of ours, Witham, and they are going to tell us about financial literacy and good business savviness to keep your business financially healthy, which is perfect time. We're in tax season. Everyone's looking at their profit and loss and their bank statements. And so what a great time to talk about keeping a healthy business financially. So first, Victoria and Caitlin, welcome to the show. Would love if you told us a little bit more about what Witham is and what your roles are there.
Sure, thank you. So, hi everyone. My name is Katie Chefalas, and I'm here with Victoria Iezzi. We are both senior managers at Witham, which is an accounting firm. We're about the 20th largest firm in the country. We're a full service firm offering tax audit advisory services. Victoria and I specifically are a part of our technology and emerging growth practice. So we work solely with startup companies and we absolutely love what we do. And then even further, Victoria and I decided to launch our women's health and wellness vertical about 2 to 3 years ago. Just something we're both super passionate about. So, if anyone has any questions after this, don't hesitate to reach out to either of us.
In fact, if you have questions during it, you can comment and we will see the comments and we'll live answer it. Victoria, I would love to hear from you.
Sure. So just like Katie said, senior manager with them, very passionate about the FemTech and women's health and wellness space, personally and professionally, right? I think we can all benefit from it. So excited to be here and to answer any questions you all have.
I think it's funny. You guys really fit the FemTech model. So something that we see is that large companies often have female employees within that are passionate about women's health, and they sound the alarm and they talk about it until the people at top say, okay, fine, we'll give you a budget or we'll allow you to do this initiative. And so you really are the example of FemTech where there's all these female accountants that I work with you guys, and you're internally being like, we need a women's health focus. So I love to see it. It's so great. And you've been great partners for years with us at FemTech Focus and FemHealth Insights. So happy to have you here. Let's jump into the meat of our conversation today. First, we're going to talk about challenges faced by FemTech businesses. So my first question for you is, running a business is super complex and challenging. It is not an easy life to be a founder. Founders, much love to you out there. But what unique challenges and complexities do FemTech businesses face?
Yeah, I would say for FemTech businesses, one of the big unique challenges is that you have education as well as being in a regular, startup, right? So startups, like you said, founders are complex and difficult without a doubt. But when you're in the FemTech space, you also have to educate. So you might be speaking to VCs that really don't know much about the space, don't know much about women's health. Don't understand the why behind what you need to do, right? They might not realize, the symptoms for a woman having a heart attack is completely different for a man having a heart attack, and that information needs to get out there, right? Also, it's education of society as well, not just the investors. A part of your company is educating why do women in society need these products or need your services, right? So it's this extra layer of education throughout, as well as just delivering on your product, which is difficult in and of itself. And also, not to mention advertising boundaries, right? Sometimes parts of our bodies aren't able to be mentioned on certain platforms, and other companies and other startups don't necessarily have that barrier to be able to put their product out there or information out there. And then it's also, balancing the passion with business, right? Business can be, you got to be objective sometimes. And it's hard when you're really heartfelt and passionate about what you're trying to do and the message you're trying to get out there. So sometimes it can be a really difficult balance for a FemTech founder to say, ooh, you know what, maybe I need to pivot on this a little bit or change my direction to make my business successful. Or do you make the decision to maybe go the other way, right, and follow the passion? So it can be a bit of a balance there.
Oh, those are such great points. I could not have put it more succinctly. I would love to just reiterate that education part because founders are not only educating the investors, so most of their pitch is actually a sex ed class versus a business pitch, right?
Mhm.
But they're also educating the female consumer. They say that on average, women are experiencing menopause symptoms for 3 years before they realize, oh, this is menopause. I didn't even know that
Mhm.
this was it. And how can you sell a product to a menopausal woman when she doesn't even realize that that is what she's experiencing? So there's a lot of, I presume, budget that would have to go into actually the education part versus just sales and marketing. Wow,
Yeah.
really great points. What are some of the most common growing pains of a femtech business, you would say?
Sure. I mean, I think it unfortunately goes without saying the funding gaps, right?
Mm,
I know probably all of us on here right now are familiar with the statistics. Femtech and women's health companies, they receive just about like 2% of all VC investments in health tech companies. And, while it is a small percentage that obviously all of our goal here is to get that up, I do think it is important to note that interest is rising. VC investment did eclipse 1 billion last year, which is an improvement from 2022. 2021 was kind of that weird COVID year, it was kind of a one-off situation. But so 2022 it went down, but 2023 finally eclipsed a billion, which is great. And I think, historically it has felt like maybe VC firms feel like they have like a check the box requirement for a women's health company. Like once they get one in their portfolio, they feel like they've checked the box and maybe they take less future pitches from women's health companies. And I've been to a handful of like just general health, digital health conferences over the past year, or even within the last 6 months, I would say. And at almost every single one, femtech was specifically spoken about.
mhm.
And it was noted that there's still so much untapped potential. So I think hopefully the check the box mentality, hopefully that's becoming a thing of the past. Fingers crossed. We hope
Yeah.
it seems the signs are showing. So hopefully. Um, and then, next I think is proving credibility. And
Mm,
honestly, this applies to all health tech companies, not just femtech, but, customers and investors are looking for evidence-based results. So
mm,
teaming up with health professionals and having them back your business up with scientifically proven evidence, that's vital. This ensures that your business is credible and also helps customers understand like why they need you or your product or your service, um, which kind of dovetails into my next point, which is understanding the importance of gaining customer traction
mm.
and proving your need in the market. So having a vision is vital. Every person, we're all definitely super passionate about women's health, and that is so so important. But at the end of the day, investors, they are looking for they do want a great idea, but they're looking for more than just a great idea as well. So, focus on developing, a prototype, get your product out there to customers, um, and prove, what problem you're solving um, in the marketplace. And, I've been lucky to listen in on some pitches in my career, and investors, some of the main things they want to know that one, your product or service is solving a specific problem or there's a high demand for it. And two, that customers are willing to pay for your product or service. And then even beyond that, how much of your revenue is recurring. Um, Also once you go to the market, you tend to get a lot of feedback from customers,
Mm.
right? So once you do that, then you can make tweaks to your product or your service, or maybe you even pivot a little bit. So, one of the things I would recommend is don't don't get stuck in the idea stage for too long.
Mm.
Like I said in the beginning, it takes more than a great idea. So you want to get out there in the marketplace. Um, and then lastly, I would say just getting the right team in place to support your vision. Um, I think investors really like to see startups with more than one founder. especially if maybe those founders have different skill sets. So maybe one is more on like the technical side of things, or engineering, or whatever it is. And then maybe the other founder is a little more business savvy or something like that. So, but that makes a great pairing. And they really do like to see that. So I would say those are some of the most, or I think the question was growing pains. I think I might have just went into some general advice, but
No, but those are
yeah,
great. You
yeah.
know, your second and third point, I could see there being some friction between them, right? So your second point was make sure you're science backed and proven to be good, but your third point is get to market and get proof, right?
Yeah.
And so, you know, one thing that I think we're really missing in FemTech is more government grants, because government grants is what comes in and solves that second problem of doing scientific research, clinical trials, you know, getting third-party validation, and then you can go to the third, which is the actual testing of it. And so unfortunately, a lot of femtech companies, their funding rounds are actually going towards research, which is actually stuff that the government should be funding via grants. Europe actually does a great job of this. European countries and governments do a great job of allocating funding for research, but not in the US. So NIH, come on, raise your budgets for women's health research, because we need
That's
it.
our plug.
Get with it.
Well, let's dive into our next topic, which is tips and tricks for a healthy business. So what are the top 3 tips for running a financially healthy femtech business? It'd be great if you maybe had some examples too.
Sure, absolutely. So I would say number one, and many of the founders probably listening in already know this, but cash is king, right? Know your runway, meaning know what your cash burn is. How much are you going to be spending in the next 6 months? Where are your cash balances going to look in the next 6 months at a minimum, right? If not 12 months, if you can manage that, right? It's really twofold. The importance is you know when you're going to be running out of cash, because as a startup in FemTech and in any startup, you're going to get close to running out of cash. It's kind of the nature of the beast, but it's better to know how far out it is until you need it, because then you can go early to your previous investors, to future investors, to even, you know, finance companies to potentially get debt, right? It allows you more options earlier on, and it also makes you look more prepared. It makes you look more professional and kind of business savvy to kind of be like, you know what? I'm not there yet, but I know in 12 months, I'm going to be needing to get this done. So to have those conversations earlier, to have that knowledge, I would say is the number one most important thing to be a financially healthy company in any tech business, any startup, right? So just know your runway, have your budgets in place, right? And, you know, kind of tagging along to that is accurate financial statements. I know they're not fun. It's not a fun thing to talk about, but, you know, investors want to see what your cash flow is going to be. They want to know how you're going to spend their money, right? And you can't really do that if you don't really understand the accounting of it. You know, we can talk a little bit later about, you know, what those resources can be, but, you know, it is important to kind of have that structure in place, even though I know it's not always the fun thing to talk about. You know, the next thing I would say, so number 2 on the list is, and I kind of talked about it a little bit earlier, you know, making those hard decisions, right? When you're a business owner, you have to make that decision of, ooh, do I need to cancel that subscription that maybe gives me a little bit more productivity in my life because I need to save that cash for something coming along with my research that I need to get done to grow my product? Or, you know, or is it worth it enough that I hold on to it and maybe wait a little bit longer on something else, right? So you have to really make those objective decisions and almost take, you know, the passion out of it for a few minutes and just kind of be like, okay, you know, black and white. Once you know where your cash is going to be, what do I need to do to get there? And what pivot decisions do I need to make? And that also comes down to, too, you know, if something's not working, right? And just being honest with yourself if it's not working and deciding to make the change to do what does work for where you want your company and business to go. And then, you know, the last thing is getting involved with, you know, like an advisor or a bookkeeper early. So I have a client who didn't do that, or they went with maybe a route that at first, like in the very, very beginning, when, you know, was good for them. So they went with a provider that maybe was really bare bones, didn't really analyze things all that well. And then as the company grew, they stayed with that advisor. And later on, it ended up actually costing them a lot more than if they would have gone with maybe a more expensive provider, right? Because as your company grows, you need to have people with the skill sets that know how to guide you in the right direction, right? So like from a tax perspective, right, is something I can think of as well, is if you don't, set up your company in a certain way in the beginning and you're not, investing in those advisors, because it is an investment in the advisors to help make sure you're set up correctly, it can cost you a lot down the road. So it's really investing this money up front or a little bit earlier on in the business, and maybe a little bit more pricey advisors to avoid having to get things fixed later on down the road, having to do things all over again because they were done incorrectly the first way. So you have to not only pay for it twice, but probably pay a little bit extra because they have to go back and fix things. So, as far as being financially healthy, I really think those are three big things when you're first getting started to kind of think about and have in the back of your mind.
Gosh, I wish I heard this years ago at my first startup. I think it was like 8 years ago I started my first startup, and I can remember we were raising $1 million, and we had an advisor that was like, "What are you going to spend it on?" We were like, "This, this, and this." And she was like, "Show me your budget." And we were like, "Well," and she was like, "No, you can't just assume something's going to cost 200,000. So you just put it on there. Like you need an Excel sheet that breaks it all down." And I felt so like embarrassed but I didn't know what I didn't know. Right. And so like, if you're listening to this and you're like, I'm an entrepreneur for the first time, like it's okay if you're like, I literally have no idea what they're talking about. I've been there, right? And I was already pitching and I was like, oh, oops, I'm supposed to make a budget for what I'm spending $1 million on. Okay, right? And then I remember the first time I ran payroll, I didn't realize how much taxes the company paid in payroll taxes on top of what the employee paid. And I had to like tell everybody, like my two co-founders at the time, that, hey, our salaries are going to be smaller because I didn't budget for this, but it was like, I didn't know what I didn't know. My biggest advice would be to talk to a founder that's just a few years ahead of you about these like simple things that are like, they're not in the books, they're not online, right? They're just the every mundane operational stuff that you're like, I didn't see this coming, but it all adds up. It all adds up. And if you want to be a successful business, you got to learn about all this other operational things and or have awesome advisors like Witham who can tell you this, right? So, wow. I, again, wish I could go in a time machine, but it's valuable stories now. Where do y'all think most FemTech companies miss the mark on building a financially well business?
Sure. Yeah. I mean, I think exactly what you two were just talking about, so I won't go into it for too long, but hiring people, building the right team, getting the right advisors into place, really can't emphasize enough the need of a solid attorney, especially in the beginning. Should you be an LLC? Should you be a C Corp, an S Corp? Like Victoria said, those really early decisions can have like a major impact later on. And then, understanding when it's time for a CFO and building out your accounting team. I think another thing we see is some pitfalls related to like early stage valuation. There's always the risk. There's the risk that you do it too early. So
and just quickly, Caitlin, do you mind explaining what evaluation is for maybe viewers who don't know?
Yeah, sure. Yeah. So when there's something called a pre-money valuation and a post-money valuation. So pre-money valuation is the value ascribed to your company before any like investment has been injected into it. And then post-money valuation is basically just the pre-money valuation plus any investment that gets put into it. So investors, this is like a critical piece of the negotiating and all of that, because that, the valuation determines what percentage of equity stake they get in your company after making an investment. So, if you do it too early, so, let's say you're in the idea stage, you're doing like a friends and family round, but you decide to give someone an equity deal during that. So, maybe a family friend gives you $10,000, but they say, I want, a 20% stake in your business. That implies you have a valuation of $50,000. And then, so you have that, and then let's say you're ready, you're in the next phase, and you now feel you're ready to go to angel investors. They would probably question why does this person on your cap table own such a large portion of your business for such a low investment amount? So in the early stages, it's typically better, if you're doing like a friends and family round, it's better for that to be in the form of loans, as opposed to equity deals. And then, there's also the risk of valuing your company too high too early. I'm sure, founders always want higher valuations, investors are looking for lower. You see a number and you're like, oh my God, this is amazing. But it is risky, because if you have too high of a valuation early on, you could potentially set yourself up for a little bit of failure in the future. It could increase your likelihood of a future down round. All that means is that, you had a valuation at a point in time, and then the next time you got a valuation, it decreased, which usually isn't a great sign. So you want to try to avoid that. And then, investors might not find your, business attractive because they won't get enough of a percentage of ownership if your valuation is too high. And then I think lastly is just understanding the metrics of your business. Like Victoria was talking about cash burn a lot before. Like, what is your cash burn rate? How much runway do you have? If you do raise a round, how much additional runway will that give you? And what will you do with the money? Like Brittany was saying, like, you're like, okay, if we get this money, this is what we're going to do. But they want to, they want to know that you've put, thought into those numbers, and they're meaningful. They like to see milestones achieved. Understanding what are your customer acquisition costs. This is a really big one for all companies. I think especially if you're an e-com company, and then beyond that, once you get a customer, what is the lifetime value of that customer? So just having a really solid understanding of these core things, I think, will do wonders in setting you up for success. And then when you are talking to investors, because, like I said, I've sat in on a fair amount of pitches, and you want to be able to answer intelligently and quickly. I mean, it's also not the worst to be like, you know what, let me get back to you, as opposed to trying to answer it on the spot and you don't have it. If that's the case, it's always better to just be like, you know what, let's have a chat after, once I'm able to look into it more or something.
Yeah. I actually am going to kind of contradict my other feedback, which is that investors really care on how you're going to spend your money, which is true. They do. They actually care more about what milestones you will accomplish that will increase the value of your company before you fundraise again. And so the first question is, what milestones or goals or accomplishments will you make with this $1 million that will then increase your valuation and increase our chances of getting our money back in the next round of funding? But then the second question is, okay, now how are you going to, spend that money in order to accomplish those milestones? Right. Yeah. I think that's really important. Sometimes I see FemTech businesses seeing it as, well, this is our operational just pot of money, and we're just going to see what happens and then we'll raise more later, versus we need this to set up this study, to accomplish this trial, to publish this paper, to, acquire this many customers, to reach this revenue. Those are milestones that actually is building the business, versus just, well, we're operating and hopefully we'll be on Oprah someday, right? Just hoping that pops off. Such good advice. Oh, well, the last set of questions I have for y'all is about seeking support. So what resources would you recommend to help build financial businesses and operational skills for a FemTech company?
Yeah, I mean, and we've already kind of talked about attorneys and bookkeepers. I think that's kind of, number one, definitely attorney. You got to have a good attorney. Other resources, LinkedIn is a great place to start. There's a lot of information about building companies and building your management style and operational style on this platform. And just have mentors, right? You got to have mentors out there who, like you said before, Brittany, have been through it before. They can tell you their mistakes and you can learn from their mistakes. I like to think of having like your own personal board of directors. So like 6 mentors from different areas, different, walks of life, even, maybe they're not even in FemTech or anything like that. And you can go to them with your questions and then you kind of get their advice and you can tweak and change kind of based on what their experience, right? And be able to kind of get that information to make your decisions. And then kind of the last thing, a little bit more going back towards like advisors, but don't be afraid to network with like bankers and folks like that, even early on, even if you're not looking to get a new banker, or even if you're not looking to get debt. It's always good when you do need to do that, because you never know when you're going to need to actually like get a debt funding. Well, hopefully you do a few months out, but there might come the time where you need to do that and you're not necessarily looking at equity investment. And so it's good to have somebody that you trust, because there's a lot of banks out there who specialize in technology and are familiar with startups, and getting to know them, because they can actually have a good partnership with you and they can work with you if you're coming upon a hard time or if things have changed and you need to maybe restructure your deal with them. So I would say get to know your bankers and kind of have, know somebody that you can call when that time does come, because you never know how the economy will shift, and it's always good to kind of know somebody that'll have your back and be a good partner.
Yeah, I think banks are actually an underappreciated challenge or partner potentially for startups. I mean, we saw with Silicon Valley Bank, going under and what that caused and what that happened. And no one really considers your bank could go under, right? Like that's a thing. I remember my first startup was a dating app, and we had a bank account and I was fundraising. And it just so happens that usually when you're fundraising, all the capital comes in at once. And so we had an infusion of over probably $500,000 in a single day. And in my bank account, it was a brand new bank account. And the description was that it was a dating app. And the bank, I won't name it, but they closed us down. And I had investors being like, the wire's not working. And I went on and it was like, your account is closed, because they flagged it as potentially like inappropriate, because it was dating and like this $500,000 was infused in one day,
Mhm.
And so I was like, what? No, I have investors trying to fuse money in, like what? But I had a banker who like had set me up and was like, I'm going to call the president of the bank, like I'm going to fix this for you. Right. But if I didn't have that advocate, when I was calling customer service, they were like, sorry, it says it's, no good. And what would I have done? Right. Like, thank God I had that banker to be like, to help me reopen my account and validate, like, no, this is this science-based dating app. This is not something illegal. This is actually legitimate startup. So underappreciated. And then our last question for today is, Witham hosts networking events and mentorship opportunities. How can our audience connect with you?
Yeah, so we're always looking to get more involved in the community. We do sponsorships. We've been working with Brittany for quite some time. So, if anyone's interested in connecting with us, just feel free you can reach out to Victoria and me directly, either through our emails, or you can find us on our website. We would love to connect with you guys.
What are all the services that Witham offers?
Oh, goodness. So,
or what are the ones that might be applicable
to
people listening?
Yeah, I would say for like early stage, tax compliance services is a big one. So, helping with the corporate tax returns, sales tax. We actually have a group that is specifically, it's called our founders and executives group. So it's, we focus on the individual tax returns for founders. That's a great one. And then, Victoria and I are more on the audit/financial reporting side of things. So that's audits, reviews, compilations. Usually stuff like that comes further down. Usually the tax work kind of comes first when you're in the really early stages. And then the compilations, reviews, audits, those are a little bit further down the road. We do offer advisory services as well. So outsourced accounting, CFO services. We could provide you with like a handout if you wanted, like of all the various services that we
We'll
provide,
drop
if
it
that's helpful.
in the comments. Yes.
Mhm.
And then how can people reach out to you? Should they just go to like your LinkedIn profile if they're watching this right now, send you a DM?
Yeah.
That would
Either
be
that, or I
perfect.
don't know if, yeah, if like our emails as well. I don't know if those are on here, but yeah, either LinkedIn, email.
And then we
Perfect.
also have
Either way works.
the Witham website. Sorry, Katie, didn't mean to interrupt. We have the Witham website and we have a women's health and wellness page there as
Perfect.
well.
And I see that that has been dropped in the comments. Perfect. Well, it is such a pleasure always to work with you guys, talk with you guys. You know, this is really critical information. We can talk all day about the FemTech market and exits and the market size and how badly women need it. But if we're not running our businesses effectively, our products and solutions are not going to get to women. So unfortunately, sometimes we need to take a step back and inventory our finances and our taxes and our business strategy so that we can help women. So thank you, ladies, so much for your time today. And bye, everybody. See you again soon.
Great. Thank you.
Thanks.
Bye, everyone.